Good evening. Well, I've decided to do a video for you on this particular video is going to be on stock markets and stock markets only. I'm going to do another one for currencies, but I thought first of all, as most of you like to trade the stock markets, I'm going to do the stock markets. So we're going to start off with FTSE. Now you can see, what's happened with FTSE. I will talk to you about the markets from a technical standpoint only. I'm not really into fundamentals, although they have been, prevalent the last week and a bit, as we know from the Brexit standpoint. But first of all, look, before we saw the huge move from last week, we did have this inverse head and shoulder pattern that has been evident on the FTSE weekly chart. If I just take this out to a monthly, you can see that it's still there, but it is, no way is it as obvious as what it is on the weekly chart. Now these patterns we see unfold in the markets quite often, but when you see a weekly one, then that really is the time when we take notice. There were 3 exit moves for this pattern last week. We saw the break here of 63.85. we saw it again at 64.40, and we saw it here at 6,500. So you had 3 reasons where we could have got in the market. Now those that were trading last week can see that it went quite significantly on Friday. So what now? The market pattern that we've got in front of us has a measured target of 73.01. Now I know that to some people are like, oh my god, is it really gonna get up there? Well, let's just look and see what it's done this year. And this is really from April. We were trading up around just over the 7,000 mark. We came down to 55. So from here, for the market to go to 7,300 really isn't a big deal overall. If you look at the way this pattern has taken 6 months to form, normally with a pattern that forms, you need to give it at least half that time again for it to reach its target area. So a minimum would be 3 months. Now obviously it isn't going to go up in a straight line, so you've got to be aware that markets pull back and then come back higher, pull back again. So what we try and do is we try and capture where we should be buying this FTSE for it to go to its target area. Are we going to open strong tonight? I mean, we can have a look in a minute, but are we going to open strong tonight? Well, you never can tell. What we would like is for the market to come back and test this neckline here. Okay, so obviously we would have to give it a bit of room on the downside. So if we do buy down to 64.40, 6,400, you have to put your stops really below 63.80. The proper place to put a stop would obviously be below this 50% fib level here. That may be too far for a lot of you, so we would go then, a good stop level would be 63.60. Now if the market doesn't come back and keeps going to this point here, to be around the 67.30 to 67.5 area, and you can see there, this is the 78.6 of that whole move down starting at the beginning of the year. I think there it's going to come under pressure. That isn't to say the market isn't going to keep going higher. I think it will do. But you know, markets do not go up in a straight line. Although looking at last week's, you would beg to differ. But markets don't normally go up in a straight line. But then you would have to alter your entry point on long positions. So say we do go up to this 67.5 area, we would then be looking at the market coming down and holding all this weekly congestion area around the 65.80, 65.60. But please bear in mind that this pattern is bullish, and there is absolutely no reason why we cannot continue to go higher after some corrective pressure.